This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
Iran is pushing to recoup 25 million barrels of oil from China that has been stuck for 6 years in Chinese ports due to sanctions imposed by then U.S. President Donald Trump, 3 Iranian and 1 Chinese source familiar with the matter said. Trump is returning to power on January 20th, and analysts say he is expected to tighten sanctions again on Iranian oil exports to limit Tehran's income, as he did during his first term as president. China, which says it does not recognize unilateral sanctions, has been buying about 90% of Tehran's oil exports in recent years at discounts that have saved its refiners billions of dollars.
The structure of the benchmark Brent crude oil futures market on Wednesday reached its widest since August 2024, reflecting concern of tightening supply and expectations of a revival in Chinese demand. The premium of the first-month Brent contract to the 6-month contract widened to $3.05 a barrel on Wednesday, the most since late August. The premium has risen by more than 50% so far this year. Oil output from the Organization of the Petroleum Exporting Countries fell in December, partly due to losses in Iran, a Reuters survey showed. Concern of tighter supply from Iran and Russia due to sanctions is also boosting prices, analysts said.
Moving on to the top news in the energy sector.
China's fuel oil imports are expected to drop in early 2025 following a hike in the product's import tax from January 1st, prompting some sellers to lower prices to boost demand, several trade sources familiar with the matter said. The rise in import duties, which comes on top of a separate policy last October to reduce tax rebates on fuel oil shipments, will further crimp margins for China's refining sector that has been reeling from lackluster margins since last year. Smaller refineries, especially those without or are short of crude oil import quotas, source for fuel oil as a feedstock to produce higher-value transportation fuels.
Oil prices trimmed earlier gains on Wednesday as the dollar strengthened but continued to find support from a tightening of supplies from Russia and other OPEC members and a drop in U.S. crude stocks. Brent crude was up 32 cents, or 0.42%, at $77.37 a barrel at 12:17 GMT. U.S. West Texas Intermediate crude climbed 47 cents, or 0.63%, to $74.72. Both benchmarks had risen more than 1% earlier in the session. Next, we have the top news in metal markets. India has cut its November gold import estimates by an unprecedented $5 billion, the largest revision for any commodity in history, after errors in preliminary calculations inflated the figure to a record, government data showed on Wednesday. New Delhi said last month its gold imports hit a record high of $14.8 billion in November, more than doubling from $7.13 billion in October. The spike widened the country's merchandise trade deficit to a record $37.84 billion in November, exceeding economists' forecast of $23.9 billion and spooking financial markets.
China's lithium reserves have risen from 6% to 16.5% of the global total, making it the world's second-largest holder of lithium reserves, state media reported on Wednesday. The world's top consumer of the battery metal relies heavily on lithium imports, and Beijing has pushed for more domestic exploration in recent years. Lithium is widely used in rechargeable batteries for electronic devices, electric vehicles, and renewable energy storage systems, as well as in ceramics, glass, and pharmaceutical applications.
We will now look at the top news in the agricultural sector.
Indonesia has clamped down on exports of used cooking oil, UCO, and palm oil residue to ensure supply to domestic cooking oil and biodiesel industries, the government said in a new regulation on Wednesday. The step by the world's top producer and exporter of palm oil aims to help attain a new mandate starting from this year, of mixing 40% of palm oil-based fuel with diesel fuel, called B40, up from 35% previously, it said. Authorities in Indonesia have been looking into ways to curb UCO exports, but the extent of the tightening was not immediately clear. That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.